Hello traders, today we'll talk about a pattern that's often unfairly underestimated: triangle pattern tips. Textbooks will tell you, draw parallel lines along the highs and lows and trade the bounces, but in practice, perfectly straight trend channels almost never exist. Price rarely moves strictly within neat channels, but triangles, they appear all the time. They're easy to spot, just two trend lines converging toward each other. Here are my personal tricks to help you squeeze the most out of this pattern. Why does a triangle appear at all? It's simple: the trend moves, you draw a channel by the highs and lows, but price doesn't bounce exactly off the borders. First, it doesn't reach the top, then it doesn't reach the bottom, and you notice the range starting to narrow. Why does this happen? Because it's a real market where people trade, not robots. The longer the price gets locked in a narrowing range, the more tension builds up, and once it breaks, an impulse begins. Triangles come in three types. Symmetrical, when the lines converge evenly, with no slope. Price in consolidation. Ascending, the lower line rises, the upper is horizontal, acting as resistance, and often continues upward. Descending, the upper line falls, the lower is horizontal, acting as support, and usually breaks downward. The main rule: a triangle is two lines converging at an apex. Price can't compress forever, it will break one side. Most often, it breaks in the direction of the current trend, but not always. A mistake almost all beginners make: they enter right after the breakout. They see a candle beyond the triangle and jump in. And then, flat, pullback, or reversal. Why? Because a breakout isn't yet confirmation. Give the price 2 or 3 candles to settle and confirm direction. If the move continues, the entry is justified. If it reverses, you avoided a loss. Here's a simple algorithm and a real example of an ascending triangle. Draw the triangle. Wait for a breakout and confirmation by at least 2 candles. Enter after that, in the direction of the move. Stop loss behind the opposite side of the triangle. Take profit calculated by the height of the triangle. Yes, exactly like this. If the triangle is 186 points high, set your take profit 186 points from the breakout. It works much more often than you think. Same for shorts. Descending, measure it, set your take profit, it hits easily. Sometimes the price overshoots, but don't be greedy, lock in profit. Remember, the higher the time frame, the more reliable the signal. On 1-minute charts, a triangle may just be noise, but on a 4-hour or daily chart, it's a structure backed by real volume. And yes, on higher timeframes, profits are also bigger because ranges are wider and moves are stronger. How to avoid false breakouts? Here are 3 rules. Don't enter before confirmation. A breakout doesn't mean a signal, because price can retest and return to the broken level. Watch the candles after the breakout. No impulse, no trade. Measure the potential. If there was already a sharp move inside the triangle, the next one will likely be weaker. And one more thing: if the price moves sideways right into the apex or bottom of the triangle, forget the trade, you need an impulse. No tension built up means no move will happen. Sometimes the impulse move is too large. That can happen because of massive liquidations below a level. In that case, it's better to wait for a retest. A triangle itself is a structure, but if you want to improve accuracy, add confirmation. Here are 3 options. Volume. If there's a volume spike on the breakout, that adds confidence. It means real participation. RSI or stochastic. If the breakout coincides with exiting the overbought or oversold zone, good. You can also look for divergences. Candlestick pattern. For example, an impulse candle or engulfing after the breakout, an excellent entry trigger. But remember, these are filters, not signals. If the structure is broken, no indicator will save you. What to do inside the triangle? Don't trade. Don't guess which way it'll break. Many traders try to trade off the board as it reached the top, so it'll go down, and vice versa. But in reality, a triangle is an accumulation zone. That means it's not for trading, but for preparation. We only act on reaction: breakout, confirmation, entry. That's it. A clear algorithm. And remember, if you want trades like this to bring real profits, not pennies, understand this simple thing: 4% a month on $1,000 is $40. 4% a month on $100,000 is $4,000. You don't need higher returns, you need more capital. That's why I work with HashHedge, a prop trading company that lets you trade with company funds, not your own. You pass a simple evaluation, show discipline, and get access to an account from $5,000 up to over $100,000. Risks are controlled automatically. You can't blow the account. The system simply won't allow it. That's the kind of discipline most traders lack. So, if you want to trade strategies like this but with real capital, try yourself with HashHedge. The link is in the description. If this video was useful, don't forget to subscribe and comment which pattern you'd like to see next.